If you've been trying to short shares lately or short stocks in order to create some negative delta in your portfolio or some variation so that way you're not always bullish, I think it's a smart thing to do. But the problem is sometimes things are not working out in your favor and stocks continue to grind higher or go up. And this is where shorting sometimes doesn't work. And you think, okay, I got to have a stop in place or I got to get out of this because now it looks like it's going to reverse course. Now, there is a better way to do it if you haven't seen it with options. Now, I'm Sasha, the options coach, if you haven't heard of me by now. And what I normally do is I work with people one-on-one when it comes to trading options. I also do some things with classes, courses, and I've even got a few books. Now, recently in one of the classes that I have, we've done things on the reverse wheel strategy, which is a shorting based strategy, meaning you can short positions, but not only are you shorting things, you're also selling options against it. And I want to share with you this concept behind trading the reverse wheel because a lot of people know about the wheel, the standard wheel here, where you buy 100 shares and then you might sell a call against it, but they don't know about the reverse wheel, which is really you're shorting the shares and you can actually sell the puts against it. So this is what our class covered quite a bit, was going into the reverse wheel, but I want to show you this principle of doing the reverse wheel. So here what we've got is I've got a stock like Amazon and we've shorted it at 197.29 and the current price of the stock is 194, so it went down a bit. Now if it continues to head higher though, what's going to happen is the put that we sell against it will slowly decay and we'll profit from that. So what we've done is reduce the deltas. We've done the wheel strategy kind of backwards or opposite of this. So if the stock price stands still, we go ahead and make money from the put that we sell, because by selling this put, it means I'm willing to take those shares at a lower price. But those shares that I have, it's a negative 100. Those negative 100 shares means I owe shares. So wouldn't it be great to get those shares at a lower price? And that's exactly it. I'm waiting for that stock to pull back so I can get assigned those 100 shares, and that'll bring me back to zero. So that's what I'm doing with the put. Now, on the flip side, if it continues to head higher, in normal cases with shorting, you have to put a big stop in place and you say, okay, well, here I'm going to stop out. In this case, yes, in theory, you should have a stop. But what's going to happen is even though as it continues to head higher, you're going to be able to pay off, in this case, about $151 of premium as that stock continues to head higher. And then you could sell another one and another one and another one time and time again. Here's another position on Costco, very similar. We shorted the shares at 905 and we're looking to buy them back at 900 by selling the put. Now the current price is 903. So it means, well, I would not get those shares assigned, but if it continues to head higher, I'm going to collect $855 of premium. So this is what you're doing in these positions, is that they're different than just simply shorting the position. Now, I will say, yes, you do need 100 shares, and there are certain specific vehicles that you should do this in, because you don't want to just do it on any random stocks. This is kind of some of the criteria we cover here in the class. If you're interested in that, just shoot me a note or message down below, and I'll be happy to kind of get you some more information about that. But in either case, the point is that we're looking to go in and short the positions without as much risk as a short without any kind of defense or protection. In this case, if the stock stands still, we're still collecting some premium. If it does go in our favor and it goes down, well, then we sell it at a certain point and we still get the premium. But if it continues to trend higher to the upside, then what we're able to do is at least make some premium off the put that we sell in order to collect that income. So this is a nice approach in doing it. You can even start these positions, like for example, here is Deere. Before you even get the negative 100 shares, I could sell a naked call. And some people might say, don't sell a naked call, it's super risky. And yes, it does have some risks behind it. But if you understand the risks, then you can kind of cater and manage to it. Especially if, let's say, you have 10 bullish positions and maybe 3 or 4 bearish positions, it's not as crazy because you're trying to neutralize the portfolio, right? It's different if you're just shorting everything you've got in your portfolio. That might be a little more risky. But in this case, what we're doing is we're shorting this call right here, and we're selling it at 510. So we're trying to get a negative 100 shares of the stock at this 510 price level, because if it continues to head higher, then eventually we will short those shares at a higher price. But if it pulls back or stands still, then we collect the $375 right here, easing a little pain and pressure from the bullish side of our portfolio. So that's the good news behind these positions, is that they are pretty flexible. They've got some versatility to them, and there's a lot you can do with them. In fact, I've got another one with a regular position here with Pinterest. You can see this one is a normal kind of covered call position. This is a bullish position. So you can see I've got a delta of 62. So if you have a lot of these positions and then you offset it with something like a Costco, now it gives you some balance in that portfolio, because if you had everything bullish, 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 that would be a problem. So we can offset things and have some things on the bearish side, or you could do it a little bit different where, you know, you can find a flow for yourself where how much balance do you want, where over here we might have bullish, over here we've got bearish, and now you might say, okay, well, I'll put a few things on the bearish side and a few things on the bullish side. And what you're trying to do is just kind of work the positions at a neutral state. So you might have 3 positions here and 3 positions here. If you want, you could have 6 positions on the bullish side and only 3 positions on the bearish side. It's up to you. But what you're trying to do is structure the portfolio based on market conditions that you've got. And what this does is allows you to have some flexibility when the portfolio is going down on some of the bullish things. At least you've got a few other things that are profiting or increasing, and that's the beauty behind it, because otherwise we get like emotional. We're like, oh my god, my portfolio is tanking, and then everything is red, and that's what you don't want. That will emotionally freak you out as well. So when you have more things in the mix, some variance or variations, it will give you a little bit more of a peace of mind. So anyways, this is a good starting point for a lot of people. I've got some other things in here. Let me see what else we've got. Disney also shorted this position. This one's a little bit different in that I bought some additional protection. So at a more advanced level, let's say we've got, here's our shorting position. And this one, you can see it continues to kind of go up or grind up on me. So the shorting positions that we've got, we are down $60 because we sold the stock at $99.34. This is $99.94 now, so a little bit higher, $60 loss. But this put that we sold is starting to bring in some revenue, and the theta is going to kick in. So we're up about $8 on this one. But we've also got some defense or protection on that short side, just in case for an emergency, in case it like really gaps up. So you can see what we've done is constructed is still a kind of a reverse wheel or a covered puts strategy, but we've added some additional protection there on that one. CVX I don't have. Let's see, General Motors right here, also another one, short position. You can see negative 45 here, but what I've got is this put that's bringing me in $29. So look, from the stock, if we're losing 45, but we're making back about 29 right now, and we're going to get some theta decay because at the end of it, I'll make maybe 85. Okay, so we'll be able to make that back. 85 is what I sold for. So in total, we're actually only down $16. So you don't have to be as scared of shorting these positions. You know, a lot of people think there's a lot of fear in doing it, but it's not much different than, you know, buying shares and selling at the upside. In those cases, when stocks crash, they usually crash down. They don't usually crash up. So I'd say actually doing something like this is a lot less fearful or panicky. But, you know, it's not something people are used to. It's not something people are comfortable with. And that is why it gets a bad reputation to some degree, because, well, people are uncomfortable with doing something that's a little bit different. Here's Target. Also another one that's, you can see the stock actually is breaking even. We sold it at 104.95, and here it is 104.94. So we're up $1. But the option itself is giving us $43 of premium because it's just decaying. So this stock is really just sitting still, but we're making most of our money from the option. So there you go. It shows you a lot of variation there that's possible when it comes to these positions. Anyways, that's what we've done kind of in the class. And anyway, if you're interested in more about classes, workshops, and those kinds of things, just reach out on our website. There's a tons of material on there, and we continue to make classes every single month. There's a lot of new material on there. So truly appreciate you sticking with me. Hope you get a little bit more insight here by watching this video, and continue your trading, continue evolving things, grow yourself, grow your craft. And if you have questions, by all means, feel free to reach out. Thanks for watching, and I'll see you on the next one.